Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 24th, 2025, and we're diving into WAG's latest earnings report for the fourth quarter and full year of 2024. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to be here to discuss WAG's performance and strategic initiatives.
WAG has been a prominent player in the pet services industry, and their recent earnings report has some interesting insights. Let's get started. Revenue and profitability overview. Let's start with the top line. WAG reported a revenue of $15.4 million for the fourth quarter, a decrease from $21.7 million in the same quarter last year. John, what are your thoughts on this decline?
The decline in revenue is quite significant, reflecting a 29% drop year over year for the quarter. This is primarily due to reduced demand across their service and wellness segments. For the full year, revenue decreased by 16% to $70.5 million, which is concerning as it indicates a broader trend of declining sales.
And what about their profitability?
WAG reported a net loss of $4.8 million for the fourth quarter, compared to a $3.5 million loss in the previous year. For the full year, the net loss widened to $17.6 million from $13.3 million. This increase in losses is attributed to higher operating expenses and interest costs, which have outpaced their revenue generation.
Strategic initiatives and future outlook. WAG has announced a strategic review to explore alternatives to maximize shareholder value. Can you elaborate on this, John?
Yes, the strategic review is a significant development. The board is considering various options, including potential investments, partnerships, or even a sale or merger. This indicates that WAG is actively seeking ways to enhance shareholder value amidst its current financial challenges.
They've also provided guidance for 2025. What can we expect?
For 2025, WAG expects revenues between $84 million and $88 million, which suggests a potential recovery. They also anticipate an adjusted EBITDA between $2 million and $4 million, indicating efforts to improve operational efficiency. Additionally, the addition of 3 major distribution partners could help accelerate demand for their wellness products.
Operational efficiencies and challenges. WAG reported an adjusted EBITDA loss of $1 million for the fourth quarter. How does this compare to their previous performance?
In the fourth quarter of 2023, WAG had a break-even adjusted EBITDA, so this year's loss of $1 million is a step back. For the full year, the adjusted EBITDA was a loss of $1.1 million compared to a positive $0.7 million in 2023. This highlights the challenges they face in managing costs and achieving profitability.
What steps are they taking to address these challenges?
WAG is focusing on strengthening their balance sheet and reducing debt. They're also leveraging AI and strategic partnerships to enhance their content and service offerings, which could help improve their market position and operational efficiency in the long run.
Key takeaways. In summary, WAG has faced a challenging year with declining revenues and increased losses. However, their strategic review and guidance for 2025 suggest potential for recovery. John, any final thoughts?
WAG is at a critical juncture. While the financials show some struggles, the strategic initiatives and guidance for 2025 offer a glimmer of hope. Investors should watch closely how the strategic review unfolds and how effectively WAG can execute its plans.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on WAG's performance in the comments below.